within about a year, pick up this product, and it has been called BenAccount for many years since then. And my request as an advisor has always been, I love this program. The CHIP plan is, to me, the way that benefits should be done going into the future, of basically ensuring the insurance and then using health spending accounts to cover the day-to-day compensation part of benefits. The problem was it wasn't pooled. So that meant anyone who had a higher claim, and I don't mean over 10,000, I mean over 1,000, would adversely affect rates. And so I kind of bugged BBD for literally a decade or more to create a pooled program. And a few years ago, they jumped on board and said, great, let's do this. And so we basically took that model, that plan design, and all those BenAccount cases that were out there with CGIB members, and started out the CHIP plan, I don't know what you want to call it, 2.0. And so Donnie's going to go through kind of the renewal and how the plan works and everything. We're going to unmute people so you can jump in and ask questions, or you can put up hands, or whatever you want to do to ask as we go. Again, the idea is to have a benefit plan that gives flexibility to small business and mid-size, although there's no limit on the size to it, but also covers the catastrophic and high-cost drugs. And the last part I'll just point out is it is the only transparent pool in Canada, which means every year BBD puts together all the claims data from the CHIP plan, from the insurance. We don't see the individual data, we see it in aggregate, but basically it means we renew it all at the same rate. So last year, everybody got a 2.5% rate increase based on the claims, and that happens every year, and we share exactly what that is. And as people are seeing high cost stop loss charges, I mean, the other day we had a Slack chat in CGIB where people are seeing upwards of 40 and 45% stop loss charges. We all know that this is the insurance company's #1 profit margin product, but we can't see into it. With the CHIP plan, you do, and on the public website, we have every year's renewals showing how many claims in, how many claims paid, how much premium in, and everything. So that's the idea. Donnie, I'm going to give the floor to you, and to take it from there and jump in with anything you want, and we'll start there.
Sounds good. Really appreciate that, Dave. And yeah, welcome everyone. Thank you for joining us today. My name is Donnie Bramer. I'm the business development specialist, a part of the partner solutions team here with BBD. A couple of people I just want to quickly shout out. I have the wonderful pleasure of also being joined by Melanie Ernst, Director of Partner Solutions with BBD, who's going to assist along the way with fielding any questions, alongside Dave's help as well. And a big thanks to Willow for helping set up this, Willow Monroe for helping set up this presentation, and everything else along the way. So we will be presenting, as you can see, and as Dave mentioned, the CGIB Catastrophic Hybrid Insurance Plan and its 2025 renewal. And yeah, I would suggest for questions, maybe just put your hand up and we'll address along the way, so that way we can kind of take them in order as they come through. So without further ado, let's just jump right into things here. So I would like to start by sharing a couple of statistics that were provided to me by the renewal team. Overall, the pool has seen some pretty great growth this past year, increasing by 13 new groups. So really good jump there. I wanted to also note the terminations. The only 4 terminations that we received were a result of either company closures or company sales. So not necessarily people terminating the plan because they don't like it or they've had issues. It's been things that are kind of out of our control. So that's always some good information to know, that people are signing up for this policy and holding on to it as long as they're around, essentially. This pool growth also results in almost a 30% growth in premium collected. So another great number to see. And really overall, all these numbers here are incredibly positive for the continued success of the pool there. So there's a little bit further breakdown underneath there, showcasing the premium collected, the additional premium collected, I should say, and then the new amount of employees that have been added for that growth number on the right side. We also saw a small decrease to the applied trend factor, which represents a combination of expected inflation and utilization going down just over 0.5%. So that's, again, great numbers to see for the future performance of the pool and kind of how things have been performing. It's also important to know, to highlight that of the 72 current groups apart or that have the plan and the policy in place, 18 of them will not be paying renewal rates for this period due to their rate guarantee. And I'll expand on that a little bit, but essentially they aren't going to be exposed to that rate increase. And again, I'll kind of showcase what the rate guarantees look like, when to expect them, and what they do look like depending on the type of month or depending on the month that the group's signing up for. Shifting focus a bit to cost, wanted to start by highlighting more good news that we also have a 5%, or we have had a 5% decrease to the plan's travel rates. So showcased here, just a bit of an echo there. Sorry.
Are we stuck on a slide, or is it just
No, just getting a big echo from someone. Okay. There we go. Yes, so travel rates, slight decrease of 5%. So again, just great numbers for their performance of the pool there. Moving on to a breakdown of the claims, as Dave mentioned, showcasing the performance. Yeah.
Hold on 1 second. I'm still seeing the trend factor slide. Is it just me?
Oh.
Willow?
Claims experience slide. I'm seeing the claims experience.
Oh.
I'm seeing the period highlights.
Okay, I'm good.
It's not moving.
Don't know why.
Sorry,
is
it good now, Dave?
Yeah,
good now, Dave?
I had to advance. I don't know why it's not advancing for me, but no worries.
Okay,
yep, keep going.
Let me know if it's not, and if I need to just bounce out or whatnot. Okay, so a breakdown of the claims experience leading into the rate renewal numbers on the right side of the table. So I won't necessarily bore everyone with reading through each singular number on the page, but I will highlight the information most importantly on the right side. So firstly, the overall assessment of premium and claims, which is leading to a 2.5% increase. So obviously, anything single digit is great news. Having it closer towards that flat renewal is even better. Being pretty much on target when it comes to the target loss ratio, this warranted a very minor increase to cover the variability in claims over the years, as well as a slight uptick in the stop loss and pooled claims. So ultimately, in collaboration with Dave, we did determine that this 2.5% adjustment was the correct number to continue to provide great sustainability to the pool moving forward. Furthermore, yeah, for sure.
I was just throwing a quick note. In my head, just so people kind of get the logic, I was always shooting for 4 to 5% would be like the perfect renewal. And we've seen that in competitor products like the Chamber plan that's kind of semi-pooled. Sirius is just maybe a bit higher than that, maybe around 6%, but kind of being in that ballpark. So kind of we've had a couple of years. It's a small group. It's still evolving, but I mean, we've kind of been averaging about 20% over the past 4 or 5 years. So we're hitting that 4 or 5% number. So I think this is fantastic. So thank you, and continue, Donnie.
Yeah, it definitely is. And just to kind of pile on to that, the adjustment really keeps in line with the years in the past. Tracks back, the number that we're seeing this year tracks back to the year's first renewal in 2022, and ultimately we're just really happy with the continued positive performance of the product. I will note, Dave, you mentioned 2.5 last year. I did pull those numbers from the last 3 renewals from the actual renewal document. So if there was
sorry. 2025 is 2.5. Last year was
yes,
8. Year before that was 8. Year before that was 2. So
okay,
put it together.
I just wanted to make sure I had the right numbers there. So perfect. Okay, so you can again, speaking to the old renewals, you can view the new rates as well as past renewals on the CGIB website. And I wanted to also highlight that a brand new CHIP 2-page marketing piece has recently been uploaded there, which is great to keep on hand for any new prospective clients. Dave, I believe you mentioned it's on both the visitor and member pages, if I recall correctly.
Correct. Yeah, both on the public and the member site. And just as a note, you have to be a CGIB member to sell this product. We can talk about that later on.
Yeah.
But that's why there's a lot of this stuff will be on the members only site. But the renewals and the one-pager and stuff is all on the public site. So if you're not yet a member, you can still grab information from there.
Perfect. And yeah, I previously mentioned how 25% of the groups will not be paying these new rates, and that is a result of the rate guarantees and how these are implemented for the new groups joining the pool. This slide really helps highlight how and when these rate guarantees are determined for each group that joins the pool based on when they are signing up. So right now, I think it's pretty clear that right now is going to be the best time to be putting in any extra effort into marketing this product due to the extended rate guarantees clients are going to be receiving once signed up. So just to point it out, we're looking at December, January, and February 1st start dates. These are going to be the months that are going to yield the best possible rate guarantees for each of the coverage lines. So on the health side of things, 21, 2019 months, and then the fully pooled aspect, seeing 33, 32, and 31. So again, now is going to be the right time to really be pushing this. Not to say that the months prior aren't good times, but this is where your clients are going to be getting the best bang for their buck without question. I had a quick slide about the history. Dave covered most of that, but yeah, I mean, dating back to May of 2021 is when this this originally came to fruition. It is, as Dave mentioned, available to all CGIB members across the country except for the province of Quebec. I don't know if Dave, you want to chime in on that at all,
Yeah,
but
Quebec, because of RAMQ, it's a problem with the plan design. I mean, it doesn't mesh very well. So if you've got groups that are predominantly in Quebec or even a few employees in Quebec, this may not be the solution. It's just the way that we've built the hybrid plan to pool the big stuff and to deal with the day-to-day through a health spending account is very economical. But as soon as you throw in RAMQ rules, out-of-pocket maximums, and everything else, it kind of blows the whole plan up. And we've found that with our history, and we ended up actually having to remove one of my own clients because their Quebec staffing was quite large, and it was just throwing the numbers into a mess. So that is maybe the one limitation of this plan. So consider elsewhere or consider other alternatives, just whether traditional plans and add-on HSAs and things like that.
Perfect. So let's talk a little bit more about the plan itself, what it stands for, what it looks like. What exactly is CHIP? So CHIP stands, as we've highlighted, catastrophic hybrid insurance plan. It is a pooled benefit plan, and as previously mentioned, available exclusive to CGIB members only. Last slide, I mentioned how the CHIP plan, or I was going to highlight, skipped over it, highlighted how it was inspired by refining an existing product. So that product that we utilize in-house is the catastrophic health plan. So these two products at their core are very alike. However, the drastic difference in the plan structure between the two is the pooled aspect of the CHIP plan, whereas catastrophic health plan is not pooled. Essentially meaning that no catastrophic claims within the CHIP plan will directly negatively impact the rates of the group due to that pooled protection. Next question that normally arises from that is, what are catastrophic claims? This would be health claims or extended health claims that fall under the umbrella of drugs, hospitalization, and or medical supplies. The plan at the end of the day will end up providing 100% coverage for these items once a deductible is satisfied. So regarding deductibles, the CHIP plan comes with a $1,000 and $2,000 deductible for single and family, 1,000 for single, 2,000 for family. These can be satisfied either by submitting claims through the CHIP plan, which they will not be reimbursed until the respective deductible is satisfied, or through a healthcare spending account that you can set up alongside the CHIP plan. I think Dave alluded to this just at the opening of the meeting here, that this is a popular option, and quite frankly, they often always come hand in hand. As it provides a tax-free way to satisfy the deductible through items covered on the plan. So things like drugs, accidental dental, ambulance, and such. But also, should the client choose to run other expenses that are not covered through the CHIP plan, dental, paramedical practitioners, etc., these also support satisfying the deductible once run through the healthcare spending account. So in summary, and again, I think we've said this already, that the CHIP plan provides a low cost coverage with predictability in rates for your clients to provide essential health and travel insurance coverage, as they utilize the plan and once they satisfy that noted deductible. So highlighting the plan design itself, employees must satisfy a deductible before the essential health items are covered at 100%. For someone with single coverage, that deductible, again, is going to be $1,000. Family coverage is going to be $1,000 deductible for the plan member and $1,000 combined for eligible dependents, totaling $2,000 of total family coverage. Some examples of essential health items would include prescription drugs, private duty nursing, semi-private hospital, medical equipment and supplies, all things that are going to end up not only being able to be satisfying the deductible, but also covered once that happens. Also important to note that although emergency medical travel does not satisfy the deductible, it is covered by the plan once that deductible has hit 100%. And that travel coverage is going to be up to a maximum of 60 days and $5 million per incident.
Okay, just to clarify, travel is from first dollar.
First dollar, yes.
Yeah. And I just see that Maureen has a question and her hand is up. Do you want to jump in, Maureen?
Yeah, I think you're going to get to it, but I thought I heard you say that paramedicals could be used as eligible to satisfy the deductible, and I didn't think that was the case.
They cannot be.
Yeah, right. Okay.
So anything on the right-hand side under the health spending account on that slide, parameds, vision, and so on, dental, cannot be used to fulfill the deductible. Just prescription drugs, nursing, accidental dental, semi-private hospital, and so on. Just that left side of stuff.
Thank you.
Yeah.
Perfect.
And there was another question. Will the new rate apply to just new sales and renewals? What else is there? The rates are for the year, they're guaranteed, the dates are there. Do you want to elaborate on that, Merv? on your question. Like, so if you're doing a new case, you've got it. Those are the rates. And then when it comes up for renewal, based on what the renewal date is, what it's renewing at will be the rates that are in effect at that point. So just depending on when it is. Every September 1, the rates are adjusted. That's our year end, if you will.
And I went back to that slide there just so you can take another look at it, just to get clarity on that. So talking a bit about the ideal client, sometimes there's a little bit of uncertainty of who to approach with this type of product, for some people. So I wanted to touch upon that. The ideal client for this product does vary a little bit, whether the client is in, we'll go from one side and say retail all the way to the other side of, we'll call it the construction industry. Any client that's in between this range, I'd say, is going to find great value in a product like this. I think it's important also that the client is flexible and open to an alternate approach to health and dental coverage. Essentially meaning that they're going to need to satisfy that deductible before they are actually able to utilize it. I mention that because a lot of people that maybe are not familiar with as much as we are, look at a health and dental plan and they just think you just pay a premium and get to use it as you will. It's important that they understand how this policy works and that they are open to a different approach. But I do agree with what Dave mentioned earlier, that this is a really important type of product that I think we should be pushing quite strongly moving into the future, as it does offer a alternate approach to what everyone maybe is used to in the working industry. So
you nailed it. And I just say, just recently, and I'm talking like in the past couple months, I've sold. So generally, for people that don't, I only sell 1 or 2 cases a year. I have a very mature practice. I keep it under 50 clients, and I only take clients by referral. So it's usually people are running into problems elsewhere, or they've worked with me in the past and reach out again. 4 to 5 of the plans presented picked the CHIP plan. And they were looking for traditional benefits. A couple were virgin cases. One was trying to fix a problem with just employee engagement, wanted flexibility. And so we said, okay, here's what you're asking for, but here's an alternative to think about. And we priced them so they're around the same price. And because of the pooling, the protection, the flexibility, the administrative costs are almost half of a traditional plan. The uptake is really, really good. So once you got your head wrapped around it and you can throw it out there, it's amazing how many people will jump onto it. And when they do, as Donnie mentioned, they're not quick to leave. Like, I mean, if you say to somebody, hey, you've got $3,000 in a health spending account to use to cover stuff, and all of a sudden you're going to a 80% dental plan with $1,000 max, it's not going to fly as well. So it does really help engagement quite a bit.
Yeah, again, just speaks volumes to the terminate. I can't speak too much to what the terminations and what they were years past, but being exposed to this a little bit more this year, seeing that the only terminations are due to the company closing overall or being sold to a new owner, and that's the only reason that we're seeing terminations, I think that really speaks volumes to that, without question. As far as groups that maybe we're going to see as not a good fit, I think it's important to highlight that if a group is known to have existing catastrophic claims, and that's going to be part of your your field underwriting, I guess, if you will, these are clients that we probably don't want to be actively taking on, or else taking on these higher these existing catastrophic claims, if known, of course, is going to end up resulting in potentially drastic increases to the rates by driving the claims up quite quickly. So these are probably the groups that are not meant to be taken on to the plan. And ultimately, we want to protect those that are on the plan that have bought into the pooled protection and for the future, and protect them when these catastrophic claims do arise versus bringing someone on that already has them existing and ready to claim within the first month of having the policy in place.
And Donnie, if I can jump in, we are working on a CHIP X product, which will be another
Okay.
parallel product that would have an exclusionary drug formulary so that you could have somewhere to place those cases with high cost drugs. So hoping to kind of have something out on that in 2026. So that will then this will help with the flexibility in the non-high cost drug claims. But when you have a client that wants that flexibility and they want that kind of plan design, but they already have an existing problem, I've got a client right now who will be probably the first one to test it. Then we'll be looking at maybe an exclusionary formulary to remove those high cost drugs without having a drug cap per se. So kind of a good solution in between, but that's in the coming year or so.
Awesome. Yeah, that's great for the other side of things that maybe can't end up being a part of that. So eligibility, or I'll halt there. Maureen, you have your hand up there. So before I move on, I'll let you jump in there with the question.
You might be ready to answer this, but I understand the idea of not bringing along members that already have catastrophic claims, and great to hear about that new product, Dave. Looking forward to it. I tend to like to sell an HSA only with the catastrophic, but because I do HSA for one employee and 2 employee groups, I don't qualify. And we end up in your My HSA product as a standalone. And I just wondered if there's any consideration of opening it up below 3. Dave's muted.
Sorry, I clicked the wrong button. It won't happen only because of anti-selection. It would just be too simple to put it all offside, even with screening. Even 3 is risky, but we kind of settled on that to get things going. So I don't see it in the short term.
Can you explain, Dave, if they were willing to go through some underwriting, would that be considered?
Yeah, we don't want to go down that road. Like, I mean, what you're looking for is basically, well, like real life, something like the Manulife catastrophic drug coverage or something. And
Yeah.
you can buy that as a one-off, and that's $50 a month. It's affordable. It's too hard to fit into the group model. And quite frankly, one-person groups are too hard to fit in the group model. They just don't. Like, I mean, remember, like it used to be, you had to be over 10, then over 5, over 3, now down to 2. I mean, it's not how the plans were intended or are priced. So not in the short term. Sorry.
Okay.
So moving on to the eligibility there, and what that can look like. Handful of things that we are looking for. So first of all, company needs to be in business for at least a year. As we just talked about there, 3 full-time employees working 20 hours a week is going to be the full-time definition. And then when we are approaching groups with current coverage, we are going to require the claims experience, the most recent claims experience. So that goes back to doing our best to determine if this is a group that has those existing catastrophic claims or not, and if they are a little bit too far up the ladder, not going to be a good fit for the plan. But talking about what things might look like in 2026, that might be something where we do have a solution for that. And then there also needs to be a minimum of $100 in monthly premium for the group to be able to participate in the plan. Very rarely, I think, are you going to see where that's not the case. I don't know if you come across that often, Dave, but the benchmark is there, but you probably aren't going to see that. And then lastly, the advisor, you need to be, as mentioned, an active CGIB member in order to provide that product. So fairly standard eligibility requirements, but important to note before you go ahead and are approaching groups. Just a couple things to note
And
before
I'm going to throw
moving
one
forward.
thing in there about the active CGIB member part. If you're not a member and you're watching this and going, why? It's a bit of control. So, BBD and every insurer and every TPA in Canada doesn't want to say no to people. And so if somebody puts in a bad case with existing claims, we don't have wording that allows us to remove you. But because it's mandatory to be a CGIB member, we will remove your membership if you mess up our pool. And I don't mean a claim that happens after the fact. That's totally fine. That's how it's built. But if you misrepresent and say there isn't a claim and start bringing claims into the pool, at renewal, you'll be removed. And at renewal, the plan will just go back to the catastrophic plan with BBD. It'll go back to experience rated pricing. Your client will not have to make a change or anything. It'll just have all the pricing reset and you'll be out of the pool and fully experience rated. And if you have a high cost drug, that's going to have an effect on your rates at the next renewal. So one of my rules with BBD was just because somebody messed up and we had to throw them out of membership isn't the reason for the client to suffer. They should still be able to have coverage, but they're not going to have the benefit of the pool anymore. So that's that. I hope that makes sense.
Okay. Wanted to also highlight what the plan member experience looks like. So that's a common question when we're talking about submitting a claim and whatnot. So if, for example, client goes to the pharmacy with the CHIP plan intact, they go to submit the claim through the CHIP plan, they're going to get a message in some form at the pharmacy essentially stating that the deductible hasn't been met, and that claim is in fact eligible for a healthcare spending account. So what we're going to want to have is auto coordination on, which it is by default. So that way that claim is submitted technically through the CHIP plan first to help satisfy said deductible. And then it gets moved over to that healthcare spending account and covered for the client. So again, by default, that auto coordination should be on, and if it's not, you want to make sure the plan member is turning that on.
Only
yeah,
if
and
they're single
yeah.
or don't have coverage elsewhere.
Yes. I was going to say for the family plan without spousal benefits, correct? So,
and this works really
yeah.
well as like I'm a client too. Like CGIB actually has a benefit plan just recently actually, and yesterday purchased some drugs, show the drug card, it's submitted, I pay the pharmacist the full amount. An hour later I hop onto my Green Shield app and it shows that it's pending, and a day or so later I'll have my deposited back in my bank account because the HSA is done automatically. You do not have to submit an HSA claim for anything that's electronically submitted. Where you do is things like parameds and vision and everything that would you'd end up just like anything else, submitting a health spending account online through the app, desktop, whatever your choice of media is.
So, quoting, how do we accomplish this? So there's a couple ways. Again, one more time, you do need to be an active CGIB member with proficiency in field underwriting to promote the product, essential for helping maintain the health of the pool. But the quote process itself can be handled two different ways. So one, sending the quote into our quotes inbox directly, or working with your DPS, Director of Partner Solutions, to help assist with that process. If you are unsure who that is, feel free to reach out to me personally, and I can get you connected with the person that is working with you in your territory there. For turnaround times, 5 to 6 days. Obviously, this is going to be very dependent on, the how much is coming through to our quotes team. Obviously, we'd like to hope it's on the lower end there of 5 days, but you can definitely expect within that 1 week of business time. And then if there is a requote, any changes need to be done, expect that to be turned around within 24 hours.
Donnie, can I throw in, or I don't know if you want to share it or can share it. We actually did a CHIP budgeting calculator on the CGIB members only site. Can I do control?
Yeah, go for it. Yeah, I think you can do it now.
Hold on. Why is this?
Oh, you know what, Dave? I think
it's not.
Hold on, I might be able to just do it. Bear with me.
Yeah.
Or I might be able to give it to you. That's why.
Okay. Sorry, I wasn't planning on doing this, but I just thought that slide it just made it make sense.
Willow, I might need you to jump in there and I don't know how to switch it over. That's the only thing.
Well, regardless, if we get it, great. If we don't, on the CGIB member site, there's a budgeting calculator. So you put in the province to figure out whether you're in a pharmacare province or not for pricing, because we have 2 sets of pricing. You can then fill in the demographics, just how many single, how many couple, how many family. And you can put in how much you want in a health spending account, and it'll automatically calculate what the deposits are, what the rates are, the monthly cost of the insurance, the annual cost, the monthly cost of the health spending account, assuming 100% utilization, and the monthly cost and annual cost when you add it all together. So this is not quoting the pooled benefits. Normally I would sell life and disability alongside this, but this is just the CHIP and the health spending account to give you kind of a budgeting tool you can mess around with. So if you, like I just did an analysis of my block, my average spend per employee is about $4,500. So I will say to a prospective new client, hey, average spend is about $4,500 per employee. How about we do this? We'll show with a $3,000 health spending account, plus administration, plus life and disability, plus a catastrophic, and now you're at $4,000 or something like that. And it's just kind of a great way to mess around with the numbers, feel more comfortable with what it's going to cost. And real life, we know as health spending account dollars made available to employees goes up, the utilization level drops. So generally, I'd say, and I say to clients, when you have a $2,000 or $3,000 or $4,000 health spending account, you might see utilization around 60 or 70%. We're always going to promote it as being 100% used because that's the risk. But if it's not, then it stays with the employer. It's not lost money. And so that's a real big advantage and why a lot of employers like it, because they're used to, if you have a really good year on an insured plan, the insurance company takes all the money. Here it stays with them. So a big plus.
Dave, see if you can share now. I don't know if it's going to allow you, but you might be able to bring it up now.
No, I have.
No.
Oh, hold on. Yep, I got it. Yeah.
So that way you can showcase that quickly.
Okay. Can you guys see that okay?
Yep.
Yeah.
Okay. So I just put it in as Ontario, but you'll see here the rates. These are the rates that are on the website and the renewal and everything. If you switched over to BC, for example, you'll see those rates drop to pharmacare province rates. So once you pick it, you can throw in your health spending account amounts. It's going to show you what your PAC deposit is, the float that they hold, and we'll do the math. So you can just say, okay, I'm going to say 5 single people and 5 family people, and multiply by the rates. Here's the insurance costs, and here's the annual cost. And so you can mess around with that. So it's just a great tool for people that's on the website to again, kind of mess with the numbers. I will stop sharing there. And you can take back over. And I saw there was another question.
Yeah. I was just gonna put back up just my email, so that way I'd come to the end here, but I just want to put that up so that way people do have questions, they know how to reach me. But yeah, there's might be a couple more questions in the chat that we can answer.
Position when a deductible not satisfied, but HSA is used up, gap develops, then the person has to pay for it out of pocket. No different than an 80% drug plan. You're going to pay the 20% out of pocket or go to provincial health care for like Trillium program in Ontario, for example. So yes, there can definitely be gaps. If somebody spent 100% of their health spending account in January, for example, on dental care, then they would have $1,000 deductible. So if they had that high cost drug that hit them that's $15,000 a year, then they'd be paying the first $1,000. And people go, oh my God, that's terrible. Well, if it was a 80% drug plan, like most of us use, 80% of $1,500 is a whole lot more than $1,000. So that's that. So gaps can happen just depending on timing and what people are using. And the second question from Mitch, how does this work when the HSA is employer paid, not typically split like a normal group plan? So I would say since the pandemic, cost sharing with employees is not as normal as it used to be. We don't get asked for 50/50s ever anymore. This is me as an advisor. This is not BBD. This is just me. We're seeing most employers are trying to pick up all the cost, in so much as we're even doing a lot of employer paid tax-free LTD using the third rule to let employers pay more of the cost to try and keep people happy. So normally, if you really wanted to do the 50/50 split kind of thing, what you would do is have the employer reduce the health spending account by 50%. That's what it would end up being generally. But we also do have plans where the employee pays the life, the long-term disability, and the CHIP part of the plan, and the employer does all the health spending account and administration. And that's a good way to cost share, and that way you're not reporting taxable benefits and so on. So there's a few ways to handle that. Cool. Thanks, Mitch, for the question, and Claudia. Donnie, back to you.
Yeah, I mean, that brings me to the close of what I have to present as far as the renewal and the plan itself. I mean, if anyone has any other questions, yeah, Maureen, I'll let you jump in again here.
Yeah.
Yeah, I just wanted to qualify, the catastrophic insurance is not taxable to the employee.
No. It's
Right.
yeah,
But
it's regular insurance like anything. Yeah.
Cost sharing. You could use it for cost sharing. Well, you can't with the HSA, but it's not taxable. I just wanted you put all the pooled benefits there, and I just wanted to.
Oh yeah, no. So the life insurance would be taxable. The LTD would be whichever of the three ways you do it, and the health spending account theoretically is only taxable in Quebec, but we're going to avoid Quebec with this product.
Right, but the CHIP insurance is also not taxable.
Yeah, it's just a health insurance premium like anything else. Yeah.
Whew.
Yeah. No, you're good.
No, I thought it was good, and I went, oh my God, thank you.
Yeah. Other questions? To me, this is going back to when so I've been in the business 30 years. When I first learned insurance, I learned where group insurance came from, and I don't know if everyone knows this or not, but I mean, basically it evolved out of wage and price controls back in the late 70s. And back then it was against the law for the federal government, the provincial governments, and ultimately the unions to give raises because inflation was so out of control. And the idea was this would spread across Canada, and it did to some degree. But the unions were upset, obviously, not getting salary increases for several years. So they negotiated benefit increases. They negotiated non-insurance increases. They added dental plans and vision and parameds, things that hadn't really existed in group plans before. And they're not insurance, quite frankly. They are just compensation. So we're with this plan design, we're trying to insure the insurance, the life, the disability, the travel, the catastrophic drugs, and so on, and the day-to-day we're covering through the health spending account. So that's the big difference. Any other questions from people? There's a bunch of handouts on the CGIB public page and on the members site showing the differences and running through examples of single and family coverage and showing how you coordinate with spousal plans. And of course, health spending accounts are always last payer. And so they're all there for you. I'm just going to go back to questions. Implementation turnaround time. Are we around 2-3 weeks for new cases? Is that fair, Donnie?
You know what? The
last one I did was about 3 weeks, but it was way in advance, so we weren't really rushing or anything either, which I try not to do. If anyone else wants to jump in.
It's about
Melanie?
2 to 3 weeks.
I would say, yeah, Melanie might be able to here.
Yeah. Okay, so she said that, yeah. Which insurance companies markets are involved? I heard Green Shields is one. So this is kind of up to you and BBD. So BBD is the TPA, the third party administrator that's running the CHIP plan. Behind it is powered by Green Shields. They're there adjudicating the claims. How you add on other benefits on top of that. So, for example, if you added life and disability insurance, those are probably both going to come from Empire right now. That's BBD, I think, is preferred provider. Stop me if I'm wrong, anybody. If you added, CI or you added EAPs or you added anything else, that would be from all those different providers. And that's the joy of working with a TPA is you can pull all those in from different sources, whoever BBD partners with.
Correct.
Okay. Still got a few minutes left if anyone has questions. I've been selling this stuff for 25 years, so now's a great time to ask the questions. Throw your hand up or put it in the chat. I have not found somebody that this does not work with, except for one case. And they dismissed it right away because they were aligning, it was a non-union group that's trying to get union employees, and they gave me the union employee booklet, and they wanted to match that line for line. And so as a result, they said this isn't even on the radar. And quite often people will ask, well, this will never fly with an a union plan. And we actually had a small employer that's unionized, a rural one, and their employees were upset with the cost sharing because it was an old 50-50 model. And we put this in, and the union bought into it in a second. They got the 100% drug coverage, and they said, you had us there. You didn't have to tell us the rest. The fact that the employer is saving money, we don't really care about, but the fact that our employees have 100% drug coverage, which I should mention is mandatory generic, and there is Green Shield's standard prior authorizations on high-cost drugs and stuff, but that's standard. But they said when you told us 100% drug coverage, we were sold, and that was it. So this can even work in union groups if you have a union that's willing to talk, listen, like Donnie said at the beginning, be flexible and open-minded.
Yeah. Jennifer, I see your hand up.
Yeah, thanks. I'm just wondering, Dave, how you integrate wellness accounts with this.
So I don't. Just me personally, I'm not a fan of wellness accounts. I think it's kind of silly. I do have one or two clients with them, but we don't do it. I don't even like we can't do the flex choice thing of redistributing between health spending accounts and wellness spending accounts. But I'm sure BBD must have a wellness spending account or lifestyle spending account
We do.
option available that you could add into it.
Yeah,
Yeah.
we do through my HCSA wellness spending account. Yes.
Yeah.
So can it be integrated with this program where people could go in, make their selections,
No.
and then still no? Okay,
You-
this
you
has to
can't-
be separate.
Yeah, you
Yeah.
can't trade health spending account and wellness spending accounts
No.
in advance because you'd be dealing with two different carriers, which wouldn't have sight to each other.
Yeah, the healthcare spend account that you're going to set up alongside the CHIP plan is going to be through Green Shield, whereas the wellness account is going to be through my HSA.
Yeah.
Not to further confuse anyone, but that would be
Yeah.
the difference.
Does Green Shield even do wellness spending accounts? I don't know. I'm not
Not
asking.
to my knowledge, not with us. I don't know if anyone else has any outside knowledge on that, but
Yeah.
the only wellness that we have is, like I said, through my HSA.
Yeah. So a couple more questions. Can this be set up through a holdco or an opco? Okay, holdcos and opcos don't really exist. They're just kind of a concept. You have to have full-time permanent employees. So wherever those employees are, so standard group rules, that's who you're going to be signing up. That's the corporation that they're drawing from. So if you have owners behind partnerships, behind holdcos and everything else, they're not employees of the opco, then they cannot be. And that's all plans in Canada, with one exception, and it's offside totally tax-wise, so I won't even mention it. Maureen asked about the value adds and case studies. They're all on the CGIB site. They're not on the BBD site, and they're on the members-only site, and some of it is on the public site under CGIB tools, and under the members only section. So Mitch asks, after the deductibles met, the employee gets coverage at 100%. Yes, that is correct. And I'm just going to throw in kind of one other thing in there that kind of comes in handy. This past year, I sold a pharmaceutical company related client, and they wanted brand name drugs for everything. And that's getting harder to do these days. I mean, one, employers don't want to pay the cost of 3 or 4 or 5 times as much, but the way the plan is set up, it is a mandatory generic drug plan. But because we have the health spending account, the core plan and the deductible would pay the mandatory generic, and then the person can have the rest paid for by their health spending account. So should the employee choose to have a brand name drug, it would still be covered at the generic cost, and they can have the rest paid. So their response was, wait a minute, did we just get 100% brand name drug plan? Yes, you did. That's it. So that's kind of a neat little perk to how the adjudication works automatically and seamlessly as well. The one thing I will mention is if somebody has spousal coverage, then turning coordination off and maximizing the 2 plans makes so much more sense. It makes the dollars go so much farther. It adds another step, but most people that have family coverage and have been coordinating get it after the first claim. But it just makes the dollars go that much further.
Yeah, you're going to want to be submitting through the CHIP plan first, then over to the family plan, then back to the healthcare spending account to maximize that.
Exactly.
Dave.
It is. So hold on one sec. So is there a TLR on these groups? Not really. There is a TLR on the entire pool because your rates are not based on your claims. It's fully pooled. So the TLR becomes a meaningless number other than us in the background for the pricing of the entire pool. Is it separate based on number of lives? No, there is just assume that there's no TLR for your plan. Whether you have 200% claims ratio because of high cost drugs or cumulative drug costs, it's not going to change your rates. So you're not tracking and you're not getting any claims experience either other than the pool. So you're not getting the claims experience from your group. It's all pooled. So you're going to get a report once a year. And it's like I said, the last 4 years are on the website. Here's what the pool's performance is. And your claims are part of that pool. If that makes sense. So kind of like the chamber plan, if you will. Similar to the chamber plan. Yeah. They have a good, bad, and ugly pool, which is a unique way of dealing with it and a really unique formulary. And the chamber plan is not a bad plan. It's been around for, 40, 50 years. But it is a very different thing, other than it's the pooling is there to protect, and their average increase is similar to ours. Yeah. Mitch, we both think alike, obviously. Yeah. Any other questions? I'm sorry, Maureen, was that you who jumped in with one, or I heard a female voice?
Yeah. I was just going to say, when you were talking about the deductible, I often have to clarify for my clients that the deductible resets at 0 on January 1st, and they have to resatisfy it every year. They didn't sort of get that. They kind of thought, well, now I'm on insurance forever.
Yeah, and that is the case. I mean, and as we've gotten rid of deductibles, it's kind of an old concept that's become new again. But like, I mean, for many years, we just did 80% no deductible plans versus 30 years ago when I started, everything was 50, 100,
deductibles,
250s or, whatever, but not anymore. So yeah, you kind of have to retrain people a little bit. And this is like, not everybody gets this. Like lots of employers go, this is convoluted and messy. And if you want to think of it that way, it is. And what I say is it's also got half the administrative costs. We don't have a 25% expense loading. We have a 12% expense loading. We don't have dollars premium paid to a traditional plan that's staying with the insurer. We have funds that are being used as claims are being processed, and what's not used stays with the employer. Like it's a win-win financially for the employer, and it's a big plus for the employee to allow them to have the flexibility. So if a plan comes on October 1, the deductibles reset the following January. Yeah, the deductibles and the health spending account and everything are all calendar year. Just our renewal function is based on September. So everything else is calendar year. Yeah. Which does cause a stumble, you know. And when you bring people on, same as any health spending accounts, you can prorate the amounts. So when people start halfway through the year, they get half the spending account. If the group doesn't start at the beginning of the year, like January 1, you can prorate the amounts and so on. So there is a bit of flexibility. We can't change the deductibles. We can't change the co-insurance. All that is fixed. But there are kind of a few HSA administration things like rolling or non-rolling, things like that you can still adjust. Should we call it a day there if there's no other questions? Last chance. You can always speak, just one sec. But you can always speak to your BBD rep. If you're a CGIB member, jump onto Slack, come into one of the coffee chats, or reach out to me anytime. Mitch's question: in Alberta, we have a non-group plan. They add non-group blue with Alberta Blue Cross that covers high-cost drugs, but the employees to sign up to get them on board. So Ontario's is totally different, Mitch. Our Trillium program you have to apply for as well, but it's much more convoluted and not nearly as clean. So the pricing for Alberta reflects the lower claims being. Oh wait, hold on, no, it doesn't. BC it does. Alberta's considered non-pharmacare. Yeah. So the premium's the same. It's a small premium. We're at $24.50 for single, I think it is. But yeah, if you want, I think that's still a positive thing to do. I don't work in Alberta, so I know the product well from speaking out there and speaking to other people about it. But how you get people on board to do it, I'm not sure what the best process is out there without breaching privacy and stuff like that. In Ontario, our plans are paying first. The insurance companies, when we identified the problem years ago, they refused to adjudicate claims properly because they make so much money on high-cost drugs. So the Trillium program does not coordinate like BC, Quebec, or even Alberta's non-group blue. Sorry, I wish I could help more there. Want to wind us up, Donnie?
Yeah. Thank you, everyone, for joining us to go through renewal and the product itself. Dave, Mel, Willow, really appreciate all the support along the way here today. And once again, if anyone does have any other questions, you want to connect with your DPS or anything regarding quoting, please don't hesitate to reach out to me, and I'll be more than happy to assist. And like I highlighted before, now definitely is the time for groups to be jumping on board with this, considering the best bang for their buck. So hopefully I'll be seeing a lot of you in my inbox in the coming weeks.
You're going to send out a copy of the deck, and I'll post it on the website as well, right?
Yes,
Correct.
I definitely can.
Yeah.
I definitely can do that. Yeah.
So you're going to have Donnie's contact information, and maybe if they don't have a BBD rep, you can give them an email that they can connect to find the best rep for their province or region or territory or whatever.
Absolutely. Yeah.
Perfect. Thank you very much.
Thanks,
Thank
everyone.
you all for coming. Thanks, Donnie. Thanks, Melanie. Thanks, Willow. Have a wonderful day, everybody.
everyone.
May the sales be with
You
you.
as well. Thanks a lot.